Hi everyone. In today's video, we're talking about the Smart Money Concept Indicator. This is an advanced indicator used by many experienced traders to identify important changes in the market structure. There are multiple implementations of such market structure and pattern identification. Today we're presenting the implementation from Luxalgo. And we're starting with the supply and demand zones available in the indicator. So, what are supply and demand zones? Supply and demand zones are important concepts that help traders identify areas of potential buying or selling pressure in the market. These zones are based on the principles of supply and demand economics, which suggest that price levels are influenced by the interaction between buyers and sellers. In trading, a supply zone refers to an area on a price chart where selling pressure is expected to be strong, causing an imbalance between supply and demand and potentially leading to a price decline. A supply zone is typically marked by a previous price level where the market encountered significant selling activity and resulted in a reversal or a prolonged consolidation. Conversely, a demand zone refers to an area on a price chart where buying pressure is expected to be strong, causing an imbalance between supply and demand and potentially leading to a price increase. A demand zone is typically marked by a previous price level where the market encountered significant buying activity and resulted in a reversal or a prolonged consolidation. Traders often look for supply and demand zones to identify potential levels of support and resistance. When the price approaches a supply zone, traders anticipate that sellers will outnumber buyers, leading to a potential price reversal or resistance. Conversely, when the price approaches a demand zone, traders anticipate that buyers will outnumber sellers, leading to a potential price reversal or support. Now let's look at the Smart Money Concept Indicator and plot it on the TradingView chart. The way this indicator identifies zones is based on average true range and a few other relevant info points. We will do another video where we will explain the indicator more in detail. For now, let's focus on how to trade it. By default, the demand zone is a light blue rectangle, and the supply zones are plotted as a light red rectangle. We can see how price moves between the demand and supply zones. The simplest strategy we can use is to buy when the price closes inside the demand zone, coming from above, and to sell when the price enters the supply zone, coming from below. Looking at this price action on Bitcoin, we can see how the demand zone rejects the price and sends it all the way up for a 7% winning trade. With the proper risk management in place and the right automation platform, trading such price action can be quite profitable. So let's see how this strategy would perform over time. We're creating this strategy in Vestinda. In just a few minutes and using the backtesting feature, we will see the results on Bitcoin for 18 months. Let's create a new strategy from scratch and give it a name. We will trade on the 4 hours time interval. As we saw on the chart, we enter a trade when close price touches the demand zone. This rule can be easily created by dragging the close price indicator and setting the time interval to 4 hours. Then we want the close price to be lower than the top of the demand zone rectangle. For this, we drag the lower than operator, and then we need the Smart Money Concept demand zone top indicator. To easily find this, we can search it in the indicators list on the left. Drag it in the entry condition and set the time interval to 4 hours also. I will explain how this indicator works. It gives us the top price of the demand zone. As seen on the chart, a demand zone is like a rectangle, and we can use in our strategy rules both the bottom price and the top price of this rectangle. For the entry rule, we are using only the top price of the demand zone. The shift back parameter tells us which of the demand zones to use. There are up to 5 demand zones that the implementation returns. We can work with any of the 5 previous demand zones, but for today we are keeping the parameter to 0 as we only care about the last zone. As we want to trade only spot and long positions, we will add another filter to the condition. We'll only trade when the trend is bullish. There are many ways to do it, but one of my favorites is the super trend indicator. Let's add to the rule a condition that close price is greater than the super trend line. It's as easy as drag and drop again. Great, our entry condition is done. To exit a position, we will create an exit rule. We said that we close the position if the price touches a supply zone. This is very similar to the entry condition, only that we are using the smart money concept supply zone bottom indicator. This is the bottom price of the supply zone rectangle. When there are no supply or demand zones, the implementation of the indicator returns 0. So we need to make sure we also add a condition that excludes these cases. We are doing this by adding another condition with the AND operator. We want to exit the position only if the price touches the supply zone, and if the smart money concept supply zone bottom indicator is greater than 0. The demand zone is what we know as support. So for the sake of the example, we also want to exit the position if the support is invalidated and the price goes to a lower support zone. When the support zone is invalidated, it disappears from the chart. So basically, the condition will be the following. If the price touches again the smart money concept demand zone top indicator, and this level is below the entry price of the position, then we exit. Now let's backtest this simple strategy. We are backtesting the smart money concept strategy on Bitcoin for around 18 months or so, starting with the 1st of January 2021. In just a few seconds, we will get the results of the strategy. We got 13% in profits in a market that was not great at all. The strategy is better than buy and hold with 29%. We can see on the chart that the last trade is a winning trade. Let's validate this also on TradingView chart with the replay function. We can see the demand zone in light blue. The price touches the zone and goes below the top of the rectangle. We can confirm it's the same time the position opened in Backtesting Investinder. Going back on the replay, we can see how the price bounces all the way up to the supply zone. This is where the strategy closed the position and got a 2% win. Similarly, we can check all the other trades or more statistics that can help us optimize the strategy and improve returns. It's important to note that supply and demand zones are not foolproof indicators, and their effectiveness may vary depending on market conditions and other factors. Traders often use additional technical analysis tools and indicators to confirm the validity of supply and demand zones. But this is a great starting point to generate tens of other combinations and find the one that suits you best. Please remember that backtesting can save you tons of money and for sure a lot of time. So if you want to build your trading strategy using the smart money concept indicator and save time and money with a powerful backtesting engine, do yourself a favor and get your annual plan with Vestinder. Link in the description.